Hey, good morning, everybody. Welcome to Monday morning. Welcome to a rainy day in Central Florida. At least the morning's starting out that way. The markets had a little rough week last week, and they're not off to a good start this week. Tune in as we talk about what's happening there in just a few moments with Dave. In the meantime, I want to remind you again, we're in a very tumultuous point right now within the marketplace itself. And it's important that you understand what these market corrections may mean to you and your retirement. And so I want to get you this free report on understanding market corrections. It's vitally important to you out there looking forward to retirement. Text the word market to 863-285-3815. Here on Facebook, you can check the link right above this video to get your free report. Hey, I look forward to speaking to you in just a few moments.
5.7 Light FM, that's calling there. Hi, good morning. I'm glad you're here today. We're at 8:38 now. It's 22 before 9. Let's double check and find out what's happening to your money. I'll issue the spoiler and say it ain't good this morning. Let us sit at that for a couple of seconds, and we'll quantify it toward the end. Phillip Statler's in his office at Statler Financial Services in downtown Sebring. Phillip, good morning. How you doing?
Hey, good morning, Dave. Coming to you from the house this morning, but it's looking a little rain coming down, and that rainy day kind of goes with the markets today.
It sure seems to in the process. I didn't know for sure how big that little kerfuffle that went through here was. Evidently, at least it stretches from the north end of Sebring down to Country Club this morning. And you're right, the day starts out cloudy and crummy even before we get to money, with the Dayton, Ohio tragedy and the El Paso, Texas tragedy over the weekend. Money really kind of pales in comparison to the importance, but I did fully expect to see a downward tick on the market off of just the disturbing news from those two attacks. And then our president decides to pick a fresh fight with China, and China fired back by devaluing their currency, and pretty much everything hit the flush handle, didn't it?
Yeah, I'd say so, and it continues to get worse as we continue to hit daylight hours. And when I first got up, it was down, but it wasn't down this much, and so we've seen a pretty bad continuous fall this morning.
Absolutely. So to bring everybody up to speed, because everything's been buried in the tragedies of Dayton and El Paso on the national news this morning, President Trump issued a threat to name China a currency manipulator, and China responded by manipulating their currency. They devalued the yuan overnight, and that ends up messing with the trade balance and adds a whole new dimension to the trade war between the United States and China. There's a war of words to go along with it. Trump says something about China not buying enough of our agricultural products. China responds by saying, well, look at all the soybeans we're buying, and shows us the orders. And there's an implied threat there to figure out where else they can find soybeans. And by and large, the whole atmosphere with China is just a really crummy shade of, vomit green, for lack of anything better. It's just not a good situation at all, is it?
No, it's really not. As a matter of fact, we even got, I think it was J.P. Morgan Chase came out today and said, basically, if this trade war continues at the rate it's going, we'll be in a recession in 3 quarters.
And that's kind of newsworthy, because that's the first of any, credible or non-credible sources to actually nail us to a number as to when they expected a recession to happen. So that's newsworthy unto itself.
Yeah, it is. I mean, I think there's been a couple others that have slipped in here the last month or so that have basically said they've had some if-then statements. If this continues, then we could expect to see a recession in this time frame. But nothing from as big a name as J.P. Morgan Chase.
Absolutely. Mentioning what it's been like on the markets, pre-market down the line, I can't remember a time in which I saw a news item that says every single one of the 30 industrials in the Dow average are off this morning. And I mean, we're looking at numbers. Get into the tech stuff, it's even worse. Apple, AMD, the big chip maker, Alibaba over in China, Amazon, Microsoft, all of these household word stocks are down by more than 2% this morning. And boy, if that ain't a ticket to a sell-off, I don't know what is.
Yeah, I know. You're right. It continues to be an issue this morning as the whole 30 industrials are down. Um, and let's face it, everybody is really getting hammered this morning. I mean, the NASDAQ is right now down 2%. So that's a big number when we start to look at the opening this morning.
Oh, yeah. Single day changes over 1% are borderline earth shaking, and 2% is it borders on disaster. The bad term to use because we can always recover from even a 2% drop. Overseas markets are no better whatsoever. Let's try looking for a little bit of good news in terms of company reports. Tyson did okay.
Well, Tyson did do okay. They came out and beat a little bit on the. I just lost where I was, but they did beat, which was good. But they're like you said when we were talking beforehand, they didn't. Their guidance was a little iffy. They're actually trading down. They were up when you and I first got on the phone this morning, and so they've gone into this reversal pattern, down about a 0.2% right now, Dave.
And that's a big drop for them because the delayed quote that I had them up by over 2%, which pretty much tells you that the downward pressure is almost inexorable across the board, isn't it?
Yeah, it is. And then I had, a big name, Berkshire Hathaway.
Yes.
They reported and they missed estimates by 8 cents a share. Revenue was also below what forecasted on Wall Street today. They were hurt by weaker results in their insurance company of Geico, and some lower cargo volume on their rail system. They don't really, because I don't have the B shares, I only have the A shares pulled up, and obviously at $306,000 a share, it doesn't move much, right? So
say an 8-cent miss on a $300,000 share isn't that big a miss in the grand scope of things.
No, it's really not. But the other one I have, and I thought this was kind of interesting, is a company called Sohu, which is an internet company, internet provider based in China, and they did miss pretty substantially. They lost $1.27 a share, and they were expected to lose only $1.11 a share, and revenue was also well below forecast. Revenue in terms of their advertising revenue was a big miss, and they're down almost 7% this morning.
Wow, which kind of, even though it's not traded in our exchanges, it kind of gives you a canary in a coal mine indication that, yeah, we're having a rough day today, but the Chinese investors are having no better day and conceivably worse on that presumption that we've been talking about for a long time, just in terms of the balance of trade. We can do more to wreck China's economy than they can ours, but neither one of us are going to enjoy the ride one tiny little bit.
Oh, you're so right, Dave. And then, but on top of that, hey, Sohu is actually traded on the NASDAQ. It is a U.S. traded company, yes.
Oh, goody. One more thing to go down on us today. Just what
That's
I
right.
need, right?
That's right.
So we're looking at a whole mess of things being changed by trade and by outside factors. Is there anything coming up? And I haven't had a chance to look this week. We had the unemployment numbers last week. Anything out of the government that could give us a feeling that things are getting better this week? Any information that we're likely to see come down the internet?
There is not much. I'm kind of clicking through right now. There's nothing at all coming out tomorrow. And really nothing on Wednesday to speak about. I mean, come Thursday, you got initial claims and wholesale inventory. And then on Friday, we're going to get the PPI, producer price index. So.
And we won't get any minutes out of the Federal Reserve until the middle of next week, so we don't have anything to give us any hope of a major market mover from a macro standpoint either, right?
No, we really don't. But I will say this. One of the little headlines came out and said that, the futures are down, obviously, across the board today. And for the S&P 500, it will be the 6th straight declining day at the rate we're going right now.
Wowzer. I just noticed looking at my other barometer that I always check, looking at federal bond rates, the yield on the 10-year Treasury bill is down another 10 basis points this morning. Yield on a 10-year T-bill is only 1.79%, and that's the first indication that folks are taking their stocks, selling them like chiclets, and moving into some place where they know they're not going to get anything, but they're not going to lose it.
That you're so right. I mean, so you and I have talked a long time about you need to be prepared for this kind of situation. You need to have exit strategies in place, and I hope people at this point were listening to us, and they're not going to make some major changes, moving to bonds, which is typically what the indexes are going to do right now. That's usually what the investor community does. They're going to move to bonds, which bonds are okay on the short term, like the U.S. Treasury, short-term treasuries. But if you start looking at longer-term bonds, you're buying them at a higher price right now, which means ultimately when interest rates do start to go back up, the value of your bond portfolio is going to drop. And so that's not the best place to be moving money. You need something that's going to be principal protected.
Yeah, absolutely. Keep in mind the small investor's exit or a hedge strategy is a little bit different from the guy that can move $10 billion around at the drop of a hat. That guy looks at the notion of getting into bonds for a little while until the heat comes off and then going back into equities maybe 5, 10, 15 days later. That's not an option for folks that have a small portfolio.
No, it's really not. It takes more of a plan to make sure that you've got the right balance between how much risk you have in your portfolio and how much safety do you have in your portfolio. And folks, what I see out there today is that most people don't have enough safety in their portfolio. That's one reason we do our financial x-ray analysis, Dave, is because we find that most of the time is that people do not have enough safety in their portfolios.
Understood. And this is one of those poster child days for that illustration. Setting the table this morning. Friday was an off day, not a pretty one by any measure. The Dow was down by 98. NASDAQ was the big loser of the bunch, down by about 1% and a third, down 107 points. And the S&P was down 21.5 on Friday. We could say that was a crummy day until we look at the pre-markets this morning. Phillip, let's quantify it. How bad is it today?
It's pretty bad, Dave. To quantify it, we've got everything down significantly. The Dow is down 1.4%, $366. We've got the S&P 500 down 1.5%, which is $44.15. And we've got the NASDAQ down a little over 2%, down $156. We've got gold and silver both trading up over 1%. Gold is on fire right now. It's heading up to $1,500 an ounce. It's at $14.74 an ounce. And we've got silver moving back up to $16.45 an ounce. Now, the only downside we have right now, which you and I appreciate this one, and that's crude oil, down about 1.5% to $54.86 a barrel. And I was reading something else today, Dave, talking about oil. Is that the Iranian tankers evidently are heading to China. And if China uses that oil, that we could see a major decline in oil prices.
I love seeing the price of oil go to poop, but by gosh, I really hate the reasoning,
Exactly. I agree. It's like, okay, China just trying to get one up on us.
Absolutely. Rounded about the world, the Asian Rim obviously down big time. Chinese markets, as a matter of fact, down as much as 2.9% at the close this morning. And that dragged Europe down more than 1% on virtually every index as well. Phillip, somebody needs advice. Anybody that doesn't need advice is either a lot smarter than we are or not very smart, one or the other. How do I find you on the phone?
Niven, give us a call right now at 863-382-0037. Schedule your free financial x-ray analysis of your current portfolio to make sure you don't have too much risk. And we continue to have our free report on understanding market corrections. All you have to do is text the word market to 863-285-3815. Hey, if you look at this post on Facebook, you can just click the link right there. It'll take you right to that free report. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730. You can find us anytime on the weekend.
Absolutely. And streaming, if you're not near our radio, at newstalk730am.com. Phillip, thank you so much. We'll cross our fingers for a turnabout later on today, and we'll catch you tomorrow, all right?
All right. Thanks, Dave. You have a great one.
Thank you very much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, as we close out today, I want to thank you again for joining us. If you like what we're doing, please like our page here on Facebook and share this video with your friends and family. Have a great day. I look forward to speaking to you again tomorrow.